I've been trying to come up with a way to teach this, and the question I want to try to answer today is, does your portfolio actually rise? Now, in general, markets go up and down, but a lot of people that are fully invested in the stock market get very excited when the stock market takes a big jump and their stocks go way up because they're actually seeing, maybe an $800,000 portfolio hit $1 million. But the biggest problem is the liquidity, as we've talked about before, actually is very valuable from the standpoint of being able to pull your money immediately. But usually before someone is ready to pull the money, if they don't watch the market every day, what ends up happening is it actually takes a dip before they can get their money, and so then they end up sitting there and they get to the point where they don't even like to look at their portfolio, their monthly statements with their portfolio, because they went from 800,000 up to $1 million, and now they're down to 750. So the question I got to ask you is, does your portfolio actually rise? The difference between investing with us or in real estate, generally speaking, is it's less liquid. But in our deals, the money comes back in 1 year. Some different REITs and some different packages, funds, they keep your money in for 3 to 5 years at a time. Ours, we spend the money faster, which allows us to pay a higher rate of return. But that context of it isn't as liquid as it is in the stock market. The advantage of that, you can't sell it in a day if you're in real estate many times. But the advantage of that is it doesn't take those daily dips as well. You are tied to longevity, and the question that should be answered is, does your portfolio consistently rise? It is different for people at different stages of life. If you're in your 40s or 50s, you're generally not spending that income. But if you're in your 60s or 70s, a lot of times you need to have access to that income. And when your portfolio drops by 20 to 30%, you have to actually change your lifestyle, because your portfolio is down enough that those dollars that you're spending are more expensive than if the market was up. Anyway, so the question is, look at your portfolio and see if your portfolio is actually rising over time, and if it's rising at an appropriate rate. Because if it's going up and it's going down and the averages are less than 10%, then you're not making as much as you could be making from us. So if you want to have a question or have a conversation about it, you can call me on my cell phone, 608-306-1199. We have a lot of opportunities. We are in the shortest inventory market since after World War II. It is just shocking how short the market is for housing right now. And I believe it's going to take us a few years to build out of it. So there is a lot of opportunity. Even with the changes in the rates, there's still, for the new builds and the rehabs, there's still a huge demand for them. And I believe there will be for several years. Thanks for watching. 608-306-1199. That's 306-1199. And then Joshua at realestateinvestmentresults.com. Have a great day.